Hey guys, welcome in this new video. I hope that all of you are doing great. In today's video, I want to talk about a very interesting mindset tip that you can apply directly actually in your trading, and that can help you to simply, have better results. So let's actually get right into it. Just before I start, as always, if you're not subscribed to the YouTube channel, make sure you do that, and you can also leave a like under the video. I would truly appreciate it. So what I want to talk about today is that, as a trader, you are, trading on the financial markets, right? What is important to understand is that the unexpected on those markets, well, it can happen, right? Even what you think that is not possible or that you think will never happen, it could happen, right? Like, the financial markets are a market where you have buyers and sellers getting together to make, transactions. But, it means that they are humans that are doing those transactions. Now, of course, in today's world, there are also robots, but that still goes along the same principles. That will take a long time for me to explain why that is. But basically, even if they are robots now in trading, it's the same principle that still applies. So you need to expect the unexpected, right? That's what I want to talk about today. You need to expect the unexpected. Now, there is a fine line between expecting the unexpected and also understanding that the markets always repeat themselves. The markets move in terms of patterns, and we always see the same patterns developing over and over and over and over again. So that's why it's a little tricky to understand, and that's why I'm recording a video in the first place to explain you guys this little tip that I said you can apply in your trading. So it's not that easy to understand. A lot of people think that it's very common sense, but it's not that common sense. Because you need to understand that, yes, there are patterns that always repeat themselves, and that is why we can trade in the first place, right? Like if you, are able to see those patterns and to understand them and to see and to know how they will develop in the future, well, that's how you are able to trade. That's why you can trade, right? So yes, we have patterns that repeat themselves over and over again, but at the same time, you need to expect that sometimes the unexpected can happen, you see? So it's really a balance between those two things that can make you a powerful trader. Because, let's say that something starts to go down or something starts to go up, it doesn't really matter. And then, from your experience, from your strategy or your understanding of the market and all of that, let's say that you think, it goes up to this point, and at this point, it has to, come back down, right? Or around this area or whatever, right? Like let's say that you have an area right here, it goes up, you think it has to come down after that. Well, you need to understand that it doesn't have to do this. It's not a necessity for the market to do this, right? So, let's say it goes up and it doesn't pull back and it just keeps going. Is that possible? Of course it is. And can it do this over and over again, and at the end of the day you just have one big strong up move without a single pullback, or at least I should say without a deep pullback that you can get in the trade? Of course that is possible. Look at the pound pairs, what happened in the last few months. Like I'll post a screenshot right here of some of the pound pairs, and as you guys can see, well, it dropped massively for the last few months. And if you were trading on the opposite side of the market, if you were trying to buy because you saw a support or you saw a resistance or whatever, is your indication for buying, if you were trying to buy this downfall, well, you just lost money because it just always kept going down. Like it never did any big pullback or never created another pattern along the way. It just made one big down move. Of course there are patterns within this down move, but I'll not get into that. That's a little more advanced. But the idea is that it just went straight to the downside very, very aggressively. So if you were trading against that, well, you probably got major losses, right? Especially if, for example, you didn't use a good risk management or a stop loss. So, that's what I'm saying, and that's what I really want you guys to understand in this video. Of course, this down move was something that we could have forecast before and that we could have expected on the market. And as a matter of fact, this is what we did in Reversal Master. We knew that these moves were coming, and a lot of people were able to catch those moves and, make a good profit on them. So of course those moves are forecasted. Now, did we forecast that it would go that fast and that strong? No, of course not, right? We would forecast that eventually we would get a deeper pullback, we would get another pattern in the making. Like, we did forecast other things as well, but it just ended up going very, very strong. So you see, is where comes the balance that I was talking about at the beginning of the video. The balance of understanding that the markets moves in terms of patterns, and we can forecast those patterns and we can trade those patterns, but at the same time understanding that sometimes what you think is unexpected will happen. That is the financial market. And so this whole talk comes down to the single idea and the most important principle in trading, that you need to protect your capital, you need to protect your risk, right? You need to manage your risk like a professional, because sometimes, if you don't manage your risk well, in those situations where we sometimes get the unexpected, you will get killed, literally, by the market. Right? Like, you will just lose your account if you don't know how to manage your risk in those situations. So that's why it is really, really, really important to know how to manage your risk in order to handle those situations the correct way and to simply, survive in those movements. A lot of people think that trading is always about making a lot of money, right? Making profits, catching pips, blah, 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 all these things. In reality, trading is more a game of survival. Right? The idea in trading and the goal in trading is to not die, right? It's to last for a long period of time. And this is what most people fail at doing, because, as I said, they over risk, they think too short term, they want materialistic things, so they will do certain things in their trading that they should not be doing. Like, there's a bunch of reasons, but most people just end up not going through trading for a very long period of time because of those emotional decisions. So it's really important to understand that in those moments where the unexpected happen on the market, what you thought was not even possible did happen on the market. Well, the most important thing to do in those situations is simply to protect your ass, right? Protect your capital. That's really what it comes down to. You need to survive. You need to not get killed by the market. It doesn't even matter at this point if you make money or if you don't make money on those moves. What is important is that you can survive through those periods, so that after that, when it gets calm and when it comes back to a type of market that you know to trade, well, you can actually trade the market because you still have capital on your account and you haven't blown everything when the panic was on, right? So it's really important, once again, to understand that the balance between understanding that the markets move in patterns and also understanding that sometimes the unexpected can happen. Now, just one clarification that I want to make. When I say unexpected, it doesn't mean that you literally didn't think it was possible, or that it doesn't make sense according to the patterns. One thing I think that is really important to understand is that no matter what happened on the market, there's always a logical way that you can look at it. When you truly understand what you're doing and what you're looking for on the market and how those charts moves, you can always rationalize those moves. You can always understand them, and you can always, see the pattern and what is actually developing on the market. So when I say the unexpected, it's not totally unexpected. Everything is predictable at a certain extent, but it's unexpected in the sense of, for example, how big the move developed or how fast it developed. Right? Let's say that you were expecting a long-term upside that would take months, but it could end up, happening in 1 week or 1 day, right? Or even 1 hour sometimes, right? Like, the market can get really, really crazy sometimes. So that's what I mean, by unexpected. It's not really about the move in itself. It's more about how big the move is and how long the move takes. It can take, as I said, very, very not long for a move to actually develop, and it can go even much further than what you thought it would. So it's more in that sense that I'm talking about the unexpected, but it's a really important topic and a really important idea as well to just keep in mind. And at the end of the day, this can really improve your trading, as I said, because if you always think that the market will move slow, that it will deep pull back, blah blah blah, all these things, well, sometimes you will get caught in the wrong side of the market, and it will be really painful. You will get a big loss. So it's really important, and that's one thing I always keep in the back of my mind, that of course we trade patterns. As I said, we trade, you know, the repetition of the market, but sometimes it's really important to never forget that you are trading on a market where humans are doing transactions, right? And humans are not logical creatures, they are emotional creatures. So it's really important to, you know, just never forget that in those type of markets where you have humans interacting with each other, well, sometimes, you know, weird shit can happen, basically. Once again, when I say weird, it's not like weird in the sense of you never expected or you never forecast the possibility. It's more, you know, in terms of the size or how fast it goes and things like that. So that is pretty much it for, you know, this video. I could talk like this for a long time, but I don't want to, you know, for this video to be too long. I just wanted to share this idea with you guys because I think it could actually really help you in your trading if you truly understand what I said and if you really apply it. So if you did like the video, please share it around. I would truly appreciate it, and you can also leave a like under the video. That would mean a lot to me. Alright, so on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.